Still try to stand up. Thank y'all for coming back to another video. Take y'all from zero to hero in this trading stuff. So last video I had talked about pips and lots, but we're going to step away from the charts a little bit and talk about the market sessions. Yes, market sessions, not necessarily something that is talked about a lot, but it's something that that's important that you should know, and then you can actually utilize that to leverage your trading plan to actually be more profitable, or just increase your return when you are doing this trading stuff. So I'm going to share my screen. So what are the sessions? Just so I can explain. These sessions are essentially they're essentially like what times the banks are open. That's exactly all that it is. So same way you bank here in the United States is going to be open from 9 a.m. to 5 p.m. Right? It's the same thing. These major banks in these other countries, because trading is globally, like they have their hours, right? So as we can look on the right side where I'm hovering, right? So the Sydney is four major sessions: Sydney, Tokyo, London, New York. Sydney, their banks are open from Eastern Standard Time 5 p.m. until 2 a.m. Eastern Standard Time. Tokyo, second session is going to be open from 7 p.m. to 4 a.m. And then London session is open 3 a.m. our time until 12 p.m. And then New York session, of course, open from 8 a.m. to 5 p.m. Right? And what simply put, man, you want to trade whatever currency pair that you're trading. You want to trade that currency pair in that session, right? So if you're trading anything with the Australian dollar in it, you want to be trading during the Sydney session, right? If you're trading anything with the Japanese yen, you want to be trading during the Tokyo session. London, you want to be trading the euro dollar, or you know what I'm saying, like the British pound, right? And in the New York session, you want to be trading stuff with the New York sorry, not New York, but the dollar in it. And why? Why do we want to trade during these times, right? Because we have these things where it's called volatility and liquidity. Volatility is how big and fast the candles move, and liquidity is about how many participants are in the market, right? Because simply put, like if you don't have no like if you have a house, if you're trying to sell it, if nobody wants to buy it, then you can't do that order. If you trying to buy it but nobody's selling, it's the same thing. So like when you don't have a lot of liquidity, the brokers they actually charge more. They charge more when it comes to you trying to get in and out of trades because they don't necessarily have someone to fill those orders. All right, so here I am looking at my chart again. I got a definition down here. Don't lag on me today. It's for those who are visual learners. Come on. All right, so this is what volatility means. Again, it's about the speed and size of the market movements, like big candles and stuff like that. That in one direction very fast, and then you had the liquidity about the market participants who people readily available to execute those trades. All right. So small example. Let's look. Going back in time, that Sydney session starts with like 8 p.m. Eastern Standard Time, 7, something like that. So as we see, you got big candles, big. Let me move on over some more. So my face isn't blocking. Looking at my cursor, my dot line, we look at the bottom, it's 20, which is 8 p.m. Big, strong candles moving. You see what I'm saying? Big, strong candles. Okay, and then we got a little choppiness here during the session. That's okay. And as the session closed out, well, we had big candles again. Big candles again. Then after that, it closed. We were moving, but they're small candles, small wicky candles, moving sideways. And then this is also the US dollar, a part of the US UJ. So let's look at 8 a.m. 8 a.m. wasn't too much going on, right? But now look at this big, strong, one directional candles again, right? So that is the value of being able to trade during your session, and for that volatility and liquidity. One, so you can get part of those big fast movements, and so that way you aren't paying your broker too much when it comes to you executing your trades. So now let me talk about one more thing when it comes to this um the sessions. So now we also have, so the sessions. You know how it plays in the factor volatility and liquidity. Also, we have session overlaps, right? Session overlaps are like multiple sessions open at the same time. And that is also a great opportunity. That's actually the best. The best session overlaps are the best time for volatility and liquidity. So if you're trading the Sydney, so let's say you trading the Australian Japanese yen, that would be the best time because not only is the Sydney session open, but the Tokyo session. So not only you have Sydney banks, but you have Tokyo banks open too. So that is more room and opportunity for more big money to come in, have happen to see those big pushes and candles and fast movement. Right, we have a Sydney, Tokyo, and London session overlap from 3 a.m. to 4 a.m. You know, it's just 1 hour. And then you have the London and the New York from 8 a.m. to about 11, 12, right? So that is those are some overlaps. So not only do you have the session open, but you have another session coming in too at the same time. So that's more space opportunity for that volatility and liquidity. So yeah, that's about it. You know what I'm saying? And today. So I'm gonna just do a recap, and I'm also throw like one or two more nuggets in there. So yes, we have four major sessions when it comes to trading: Sydney, Tokyo, London, and New York. Um, London is the most is I think they have they have either the most liquid or they have the world banks there. You know what I'm saying? So they're the most liquid during London time. You know, so that's another thing that you can keep in mind. And then New York is the most traded, something like that. But like those are the biggest two sessions: New York, London. I believe London is number one. But when you have both of them at the same time, that's an amazing opportunity. Now, when it comes to the sessions, it's like it's not always more so for like the people who trade on lower time frames. That trading during session is valuable. When you trade on a higher time frame, like you're a swing trader, I don't think it plays that much of a factor. But these lower time frames, yeah, it definitely plays a factor. So you wanna when you trade, you want to trade in session. If possible, you want to trade during the overlaps because the overlaps is the most is the best time. The second best time will be just during that session itself. Um, and then because you get to work uh, in your favor, right, with the volatility and liquidity to see those fast movements, and then you can get in for the minimal fees when it comes to your brokers because a lot of people are in the market. So that's it. Hopefully, I got something out of this video. Hope y'all can go forth and be great with the session. It's not something that you think about too often, but it's something that you must know. And once you know it, you know it's gonna be a part of your plan. So y'all stay blessed by the best. God always, God no ways.